Welcome to the Crypto Breakdown Show, your guide through the fast-moving world of digital assets. We break down the latest market moves, industry trends, and the big stories shaping the future of crypto. Just a quick reminder, this isn't financial advice. We're here to share news, insights, and updates to help you stay informed and ahead of the curve. All right, let's get started. Let's start with the big players making strategic moves. Ripple is reportedly seeking a $1 billion fundraise to acquire more XRP through a new digital asset treasury. This ambitious move aims to bolster XRP's stability in a volatile market. Interestingly, XRP recently saw a 2% decline from institutional liquidation, with long-term holders reducing positions by 34%. However, open interest in derivatives rebounded to $1.36 billion, hinting at renewed trading activity. Traders are watching the $2.31 to $2.35 support and $2.47 resistance zones, hoping macro easing or ETF speculation could boost demand. Elsewhere, Huobi founder Li Lin, via Avenir Capital, is leading a consortium to launch a $1 billion Ether trust, planning to acquire a Nasdaq-listed firm for a regulated vehicle. This underscores growing institutional interest in ETH, aligning with Citizens Bank's prediction that Ether could surpass $10,000 within 2 years, driven by adoption, demand, and shrinking supply. Ethereum's prominence is also growing with Uniswap's integration of Solana support, unifying the two largest DeFi ecosystems and simplifying cross-chain trading from a single interface. Even Japan's top banks, Mitsubishi UFJ, Sumitomo Mitsui, and Mizuho Financial Groups, are collaborating to launch a yen-pegged stablecoin for corporate clients, mirroring global trends in stablecoin adoption. These strategic initiatives highlight a clear long-term vision for digital assets, despite short-term fluctuations. Now, onto the market's current volatility. Bitcoin has faced a challenging period, with U.S.-listed Bitcoin ETFs seeing significant outflows of $536.4 million, ending a 2-week streak of inflows. This reflects increased market volatility and a stronger link between macro risks and Bitcoin's price, which dipped below $110,000. The downturn deepened below $106,000 and its 200-day simple moving average, triggering a massive $1.2 billion in crypto liquidations, with Bitcoin accounting for $344 million. Macroeconomic uncertainties like U.S. China tensions, risk aversion, and ETF outflows are exacerbating these struggles. Bitcoin has even reached its most oversold level against gold in 3 years based on its 14-day RSI, with technical indicators remaining bearish. Despite the U.S. Treasury recording a record $198 billion surplus in September, Bitcoin fell below $105,000 as credit market stress, trade war fears, and regional bank fragility drove investors to safer assets like stablecoins and gold. J.P. Morgan suggests crypto-native investors, rather than traditional institutions, are likely driving this slide, evidenced by heavier Ether selling and a sharp 40% drop in perpetual futures open interest, indicating an unwinding of leveraged positions. The crypto markets are experiencing a broad sell-off, with Bitcoin near $104,500 and altcoins seeing 8 to 12% declines due to tightening U.S. liquidity and trade tensions. Analysts advise defensive positioning, as a break below $100,000 could signal a broader bear market. Even HBAR token plunged 11.15% amid selling pressure, and Stellar Lumens XLM fell 6.25% due to institutional selling, despite its successful Protocol 23 upgrade. Chainlink's Link token also plummeted nearly 9% to $16.46 despite some corporate accumulation, like Caliber Corporation's $2 million investment and the Chainlink Reserve adding 60,000 tokens. Looking at the broader economic and regulatory environment, gold has surged over 60% year-to-date, trading at $4,340 per ounce, and is testing key resistance levels against both the M2 money supply and Bitcoin. Tokenized gold products hit a record $1 billion in daily trading volume, reflecting investor flight to safety amidst U.S. China trade tensions and financial stress. On the regulatory front, French regulator ACPR is implementing widened anti-money laundering AML checks on exchanges like Coinbase and Binance, crucial for obtaining EU-wide MiCA licenses. In corporate finance, an article argues that traditional balance sheets are doomed without Bitcoin due to monetary debasement, advocating for a Bitcoin treasury strategy. In the mining sector, CoreWeave declared its all-stock offer for Core Scientific as best and final, asserting it offers the most secure path to long-term value. Arthur Hayes Maelstrom is seeking $250 million for a private equity fund to acquire crypto firms, focusing on non-token equity deals in trading infrastructure and analytics. Lastly, Bank of America reports a growing consensus among Federal Reserve officials for continued interest rate cuts in 2025, with New York Fed President John Williams adopting a more dovish stance due to labor market risks. These factors collectively paint a complex but evolving picture of the crypto market. That's a wrap for this edition of the Crypto Breakdown Show. Whether the market's pumping, dumping, or just drifting sideways, we're here to help you navigate it all. If you enjoyed the episode, be sure to like, subscribe, and share it with someone who's crypto curious. Thanks for listening, and remember, no matter where the charts go, stay grounded, stay informed, and stay crypto smart. Until next time.